There are lots of reasons why your loan officer is going to need your bank statements, even if you are getting a loan with 0% down and having your closing costs covered. My name is Mandy. I'm a loan officer. I've been doing loans for years. And prior to that, I was in real estate. I post educational content and I do my best to make mortgages a little less boring. If you want to work together, my contact info is in my bio or just follow along to learn more. Most of the time when you're purchasing a home, you make something called an earnest money deposit, which is the good faith deposit that you provide to the title and escrow company or closing attorney, depending on the type of state that you're in. That is money that goes toward the down payment or closing costs at close of escrow, or you get that money refunded if you have a situation where you're not coming out of pocket with anything at closing. When you make that earnest money deposit, a lot of times the lender is going to have to source where those funds came from unless it is below a certain threshold, and I can make another video about that. I have actually closed a loan without bank statements before, and that was because this particular individual was pulling funds from a HELOC in order to close escrow. So everything came directly out of their HELOC and then went straight to the title company, so we never had to source anything out of their bank account. That was a highly unusual situation. Most of the time, you are going to need to turn in at least 2 months worth of bank statements to your lender from the time that you start the pre-approval process to the time that you close escrow. They're going to be looking for any large deposits on there, and that's another video that I can explain what equates to a large deposit. They're also going to be looking to make sure that you are not making any additional debt payments that we did not already account for. For example, something like child support or IRS installment payments don't show up on your credit report, but they certainly will show up as a deduction on your bank account. Those things get counted in your debt to income ratio. And if you're purchasing a home using any type of income-based program, such as a USDA loan or some down payment assistance programs, we have to look at all of the deposits to make sure that that amount of additional income does not put you over the max income allowance for that type of loan. However, there's a pro tip. You can just put everything on your credit card and pay it off each month. We don't care what you spend on your credit card. We don't even look at those credit card statements, just your bank statements. So you can lump all of your expenses together on your credit card, pay it off, keep your bank statements nice and clean, and just present that to your loan officer.